You've seen the headlines, right? You've definitely heard the name, Google. But then maybe you look at a stock ticker and you see GOG, and then right next to it, there's GOGL. If you've ever, scratched your head wondering what on earth the difference is between these two symbols for, well, one of the world's biggest tech companies, you are definitely not alone. It's actually a really common question, even for people who've been investing for a while.
Yeah, absolutely. And that's exactly what we're going to unpack today. This deep dive is all about demystifying Alphabet's stock structure, giving you a really clear understanding of what you're actually looking at or maybe thinking about investing in when you see GOG versus GOOGL.
Welcome to everything you need to know about finance. We're diving deep into the fascinating world of Alphabet stock today. And yeah, we promise to make it understandable and hopefully engaging too.
And just to be really clear up front, what we're sharing here, it's an in-depth look based on the information we've gathered. It's all about getting you informed, right? This isn't financial advice. We're not making investment calls for you.
See, exactly. It's about knowledge. And hey, if you find this kind of deep dive interesting, if it's helpful, please do take a second to like and subscribe. Your engagement, it really helps us bring more content like this your way. Okay, so let's get into it. Let's unpack this. We're going to explore how Alphabet, the parent company of Google, how it runs its share classes, what that actually means for investors like you, and, well, why these two tickers that look so similar even exist. So let's start with the basics, maybe. We all know Google. I mean, basically how we search the internet, right? But Google itself, it's just one piece, albeit a huge piece, of something bigger called Alphabet. Think of Alphabet like this giant holding company, maybe a collection of different businesses under one big roof. Google's the biggest, sure, but what else is in there?
That's a great way to think about it. Alphabet Inc. officially became a thing back in 2015. That's when Google did this big restructuring. The strategy behind it was to make the core Google business, search, ads, YouTube, Android, make it cleaner and more accountable, as they put it, while also giving more freedom and independence to their other ventures, their other bets or moonshots. So yeah, when you look at Alphabet, it's not just Google Search, it's YouTube, it's Android, it's Google Cloud, their hardware like Pixel phones and Nest. And then those really ambitious projects like Waymo, that's their self-driving car tech, and Verily, which is working on healthcare and life sciences stuff. It's quite the ecosystem.
Interesting. And what really stands out, I think, from what we've looked at, is how Alphabet isn't just playing in one sandbox. It's positioned to really capture several massive tech trends all at once. You hear about the Magnificent Seven stocks, right? Those dominant tech players. Alphabet's always in that conversation. But it kind of stands out because you get exposure to AI, which is everywhere in their products, plus cybersecurity, plus autonomous driving, all under one company. So you're not just betting on search ads. You're kind of investing in a slice of the future across multiple big areas. Okay, now let's get to the core puzzle here. GOG and GOGL, they both trade on the NASDAQ. If you pull up a chart, their prices look almost identical day to day, usually super close. But you definitely shouldn't think they're exactly the same thing.
Right. Don't be fooled by the similar prices. The key difference, the fundamental one, is in their share class. GOG represents the Class C shares, and GOGL, that corresponds to the Class A shares. Now, there's actually a third type too, Class B shares. But you or I can't buy those. They're almost entirely held by insiders or founders like Larry Page and Sergey Brin, not publicly traded.
Okay, Class A is GOGL, Class C is GOGL, and Class B is for insiders. So what's the big difference then between the ones we can buy, the A and the C? It comes down to voting. Right.
Exactly. That's the heart of it. Voting rights. When you buy GOGL, those Class A shares, you get 1 vote per share in company matters. But with GOG, the Class C shares, well, they come with 0 votes, none at all.
0 votes. Okay, that begs the question, doesn't it? Why? Why would a company, especially one like Google, create shares that give investors absolutely no say? Seems a bit odd.
Yeah, it does seem odd on the surface, but there's a specific history here. It goes back to April 2014. That's when they created this new class, the Class C non-voting stock. And our research shows the founders, Page and Brin, were actually really clued about this from way back. Even in their original IPO paperwork in 2004, Page literally wrote, and I think this sums it up, Google is not a conventional company. We do not intend to become one. They wanted to ensure they kept control over the company's big decisions, its long-term path, its destiny, you could say, even while raising money from the public markets. So this whole A-B-C structure lets them bring in public investment without, risking too much outside influence on those really core strategic choices.
Not a conventional company. That definitely sets a tone. So, okay, GOGL gives you a vote. You can vote on things like mergers, maybe executive pay. But let's be real here. How many power does one vote or even 100 votes actually give you in a company the size of Alphabet?
That's the critical point, right?
Right.
And where the reality kind of sets in. While GOGL technically gives you a vote, the insiders, especially the founders with their Class B shares, hold the vast majority of the voting power. And here's the kicker. Each Class B share gets 10 votes, not 1, 10.
10 votes per share. Wow.
Exactly. So even if millions of Class A shareholders banded together, Page and Brin and other insiders holding B shares could still easily outvote them.
Ah, okay.
So for the typical GOGL shareholder, that voting right, it's often seen as more symbolic than anything else. It doesn't really translate into tangible influence on the company's direction. And for GOG shareholders, well, they know up front, it's purely a financial investment. No votes, no say in governance, just exposure to Alphabet's business performance.
Right. So the vote is more like a principal thing for GOGL holders, not real leverage. Given that, you'd almost expect GOGL to trade way higher than GG, but you said they track closely. How does that work? What's the performance story been like?
Yeah, you'd think maybe a bigger gap, but the market's pretty efficient here. Our analysis shows they track incredibly closely, like very, very closely. Sometimes, yeah, one might be a few bucks higher than the other. Often it's GOGL with a tiny premium because of that vote, however symbolic. But it's usually not much, and it shifts based on, daily supply and demand, maybe some sentiment around the voting rights. Any significant difference gets arbitraged away pretty quickly by traders.
Arbitrage, right. Buy the cheap one, sell the expensive one.
Exactly. Pulls them back in line. And something important happened a couple of years ago that affected both. The stock split, remember that?
Oh, yeah, the 20-for-1 split back in mid-2022.
That's the one, July 15th, 2022. It didn't change the value of the company, obviously, but it brought the price per share way down, made it much more accessible for, regular retail investors to buy whole shares instead of fractions.
Yeah, definitely easier to buy a share at, say, $150 than $3,000.
For sure. And performance-wise, both GOG and GOOGL have been phenomenal long-term investments, market-crushing returns over the last decade, easily.
Yeah.
Recently, they've held up well, showing continued growth, especially with all the buzz around AI and their cloud business still booming.
Okay, so we've got the history, the classes, the voting, the performance, which brings us to the big practical question for you, the listener. If you're looking at Alphabet, thinking about investing, which one should you lean towards, GOG or GOGL?
Yeah, the $1 million question, right? Or maybe the $100 question after the split. Honestly, it really boils down to what matters most to you personally. If having that vote, even if it's largely symbolic, if that principle of shareholder democracy means something to you, then GOGL, the Class A share, is your pick. However, if you're purely focused on the financial investment, the exposure to Alphabet's business, and maybe you're a bit price sensitive, looking for the absolute best entry point, then you might check the prices. And if GOG, the Class C, is trading even slightly cheaper, which it often does, though again, usually not by much, then maybe GOG makes more sense, especially if you're planning to hold for the long term, because financially, their performance is going to be virtually identical. They represent the same stake in the same underlying company. Two sides of the same coin, really.
So unless that vote really matters to you personally, the cheaper one, which is often GOG, might be the slight preference.
For many purely financially motivated investors, yeah, that's often the logic. Why pay even a small premium for a vote that doesn't carry much practical weight?
Makes sense. And quickly, what about taxes? Any difference there? If I own GOG versus GOOGL, does the IRS care?
Yep. From a standard U.S. federal income tax perspective, it makes no difference. Capital gains are taxed based on how long you hold the stock and your income level, not the share class, and dividends. Well, Alphabet doesn't pay dividends currently. But if they ever decided to, the tax treatment would be the same for both GOG and GOOGL shareholders. So yeah, taxes are basically a non-issue when choosing between the two. Standard rules apply.
Okay, good to know. So stepping back from the tickers for a moment, let's talk about the bigger picture, Alphabet itself. What's the long-term view? They seem so dominant now, but tech changes fast. What does the future look like for them?
The long-term outlook honestly still looks incredibly strong, and that obviously benefits both GOG and GOOGL holders. I mean, just think about how embedded Google products are in our daily lives. Search, YouTube, Android, Gmail, Maps. It's hard to imagine daily life without them for billions of people.
True, almost infrastructure at this point.
Pretty much. And beyond that core dominance, they are investing aggressively in the future. AI is the big one right now, obviously. It's being integrated across everything they do, from making search better to powering cloud services to developing new tools. Google Cloud is another huge growth engine, really competing hard in that space. And then you have those other bets we mentioned, Waymo and self-driving, Verily and Calico, and health and longevity. These are potential game changers for, decades down the line. They could open up entirely new, massive markets.
It really is that mix, isn't it? The incredibly profitable present funding these potentially world-changing but also risky future bets. Yeah. It's not just random science projects. It feels like a deliberate strategy to find the next Google.
Exactly. It's calculated exploration. They use the massive cash flow from the core business to fund these searches for future billion or even trillion-dollar opportunities. So whether you end up holding GOG or GOGL, you're investing in that compelling long-term vision. Now look, no company is truly invincible, especially in tech. They have to keep adapting, keep innovating. Competition is fierce. Regulatory scrutiny is always there. But Alphabet's current position, its resources, its talent pool, it suggests they're likely to remain a leader and continue shaping the technological landscape for the foreseeable future.
So wrapping this up then, whichever ticker you might choose, GOG or GOGL, you're essentially getting a piece of one of those influential technology companies on the planet. The choice really just boils down to that personal preference. Does the symbolic weight matter to you? Or are you laser focused on the financials and potentially saving a tiny bit on the entry price?
Precisely. Knowing the difference is good investor knowledge, helps you make an informed choice. But maybe the more profound question for anyone invested here or thinking about it isn't just GOG versus GOOGL, it's looking ahead. How will Alphabet continue to innovate, especially with AI evolving at lightning speed? How will they navigate competition and regulation? And, perhaps most excitingly, what completely new moonshot might be incubating right now that could become the next big thing defining their future growth? That's the ongoing story to watch.
That's a great thought to end on. What's the next big bet? Okay, that wraps up our deep dive into Alphabet's GOG and GOGL shares. We really hope this cleared things up and gave you a much better handle on it all. Until next time, keep learning.